When opening up a new small business, setting up an online store, or starting a freelance side gig, you're faced with the question of whether an LLC or sole proprietorship is the right legal formation for you and your needs. These two business models can significantly affect how you run your company from a legal, tax, and management perspective. Here's what you need to know about what sole proprietorships and LLCs do and how to choose the best option for your needs. What is a sole proprietorship? A sole proprietorship is an unincorporated business with one owner, and it's the simplest and least expensive type of business to form. An individual who operates a business independently is by default a sole proprietor. For example, if you operate as a retailer, freelance, run an online business, or otherwise sell goods and services, you're automatically a sole proprietor unless you've adopted another business structure. You can typically identify a business as a sole proprietorship because the owner's name is the business's. However, sole proprietorships can also operate under brand or trade names. The main characteristic of a sole proprietorship is that there's no legal separation between the business and the business owner, so the owner is personally responsible for the business's debts. What is an LLC? An LLC is a legally separate business entity that's created under state law. An LLC combines elements of a sole proprietorship, partnership, and corporation, offering owners a lot of flexibility. The owners of an LLC can decide their management structure, operational processes, and tax treatment. One person can form a single-member LLC, or multiple people can form a multi-member LLC. You can identify a business as an LLC because its legal name will end with the phrase, limited liability company, or the abbreviation LLC. The defining feature of an LLC is that it offers members liability protection from the debts and obligations of the business. In the normal course of business, a business creditor or someone who sues the business can't come after the owner's personal assets. We'll dig into what this means in more detail in a bit. What's the difference in the formation process? You might be surprised to learn that there's nothing specific you necessarily need to do to form a sole proprietorship. In fact, you might be operating a sole proprietorship without even knowing it. Any person selling goods and services without a partner is a sole proprietor by default. Depending on where your business is located, you might need to apply for business licenses or zoning permits to operate your sole proprietorship legally. And any business, including a sole proprietorship, that operates under a trading name must apply for a fictitious business name, also known as a DBA or doing business as certificate. However, that's it as far as formation paperwork goes, making sole proprietorships the easiest and least expensive type of business to start. An LLC might also need to file for business permits and a DBA if operating under a trading name. But the most important formation document for an LLC is called the Articles of Organization. This document establishes your LLC's existence and must be filed with the state where you operate. The cost to file Articles of Organization varies by state but generally ranges between $50 to $500. How do the management and operation differ between LLC and sole proprietorship? A sole proprietorship has a simple operational and management structure because there's just one person at the top. Owners can make business decisions as they see fit, without input from any third party. Of course, most sole proprietors hire employees, legal experts, accounting experts, and other individuals to help with the day-to-day business management. But a sole proprietor only has to ensure their business is operating safely and legally and that there's enough profit to cover business debts. An LLC's operational and management structure is more complex and is typically outlined in an LLC operating agreement. Though only a handful of states require an operating agreement, most LLCs have one, particularly those with multiple members. The operating agreement outlines each member's ownership stake in the business, voting rights, and profit share. An LLC can be collectively managed by the members or managed by an appointed manager. Usually, LLC members decide on company matters in proportion to their ownership stake, called membership units, in the business. For example, a 33% owner would have a 1/3 vote on company matters, and a 25% owner would have a 1/4 vote. Profits generally are divided in line with ownership percentages. In the previous example, the 33% owner would receive 1/3 of the business profits, and the 25% owner would be entitled to 1/4 of the business profits. What are the tax implications of each business structure? A single-member LLC and a sole proprietorship resemble each other regarding tax treatment. Both are pass-through entities, meaning the business doesn't pay income taxes. The owner reports business income on a Schedule C that's attached to their personal tax return, and the income gets taxed at the owner's personal income tax rate. Multi-member LLCs are also pass-through entities, with each owner reporting and paying taxes on their share of the business's income. The only difference is that a multi-member LLC must file a business tax return with the IRS, Form 1065, and U.S. return of partnership income. In addition, each member must attach a Schedule K-1 to their personal tax return, which shows their share of the business's income. In addition to income taxes, LLCs and sole proprietorships might have additional tax responsibilities. No matter which business structure you adopt, you'll need to pay payroll taxes if you have employees. You'll also need to collect state and local sales taxes if you sell taxable goods or services. And finally, as a self-employed business owner, you're responsible for paying self-employment taxes to the IRS. These taxes cover your Social Security and Medicare tax obligations. A few states and local jurisdictions levy additional taxes on LLCs, depending on the state. This might be called a franchise tax, LLC tax, or business tax. You'll also have to pay state and local income taxes and payroll taxes. Only LLCs can choose corporate tax status. A key difference between LLCs versus sole proprietorships is tax flexibility. Only LLC owners can choose how they want their business to be taxed. They can either stick with the default, pass-through taxation, or elect for the LLC to be taxed as an S corporation or C corporation. An S corporation is a pass-through entity. If taxed as a C corporation, the LLC will pay a corporate income tax at the federal level. Most states and some localities also levy corporate taxes. LLCs can sometimes save money by electing corporate tax status. When a company is taxed as a corporation, dividends from the business are usually taxed at a lower rate than ordinary business income. Plus, retained earnings in a corporation aren't subject to income tax. In contrast, LLC members can't treat income as dividends and must pay taxes on all profits of the business, whether retained in the company or not. A corporation is also eligible for more tax deductions and credits. What is the difference between legal protection in each of these business entities? In a sole proprietorship, there's no legal separation between the business and the owner. The owner is personally responsible for the business's debts. If the business goes bankrupt, the sole proprietor has to file for personal bankruptcy, and both personal and business debts will be included in the bankruptcy proceedings. In addition, someone who sues a sole proprietorship can name the owner personally in the lawsuit and come after their personal assets. One of the best ways to protect your personal assets is to form an LLC. Since an LLC is a legally separate entity from the owner isn't personally liable for the business's obligations. If the business fails, the owners can file for bankruptcy, and they don't have to pay business creditors out of their pockets. And with some exceptions, someone who sues an LLC can't personally sue the owners. Of course, owners in an LLC can be held personally liable for fraud, negligence, or personally guaranteed debts. No business structure offers absolute protection for owners for liabilities connected to the business. The final difference between an LLC and a sole proprietorship involves paperwork and compliance requirements. As we mentioned, a sole proprietorship requires the least paperwork before launch. After launch, a sole proprietor only needs to keep up with federal, state, and local taxes. In addition, a sole proprietor might need to renew business permits. An LLC has more compliance responsibilities. After filing initial articles of organization, LLCs must file an annual report in many states. An LLC with multiple members has even more responsibilities, such as drafting an operating agreement, issuing membership units, recording transfers of ownership, and holding member meetings. None of these steps are legally required but are highly recommended for LLCs to preserve liability protection for members. In addition, since an LLC is a registered business entity, dissolving an LLC takes additional paperwork. Which one should you choose? Many business owners, particularly freelancers or consultants, start out as sole proprietors because it's easy. Minimal paperwork is required at the outset, and there's no big outlay of cost, which is attractive for new entrepreneurs, particularly those testing a business idea. Taxes are also simple for sole proprietors since a separate business tax return need not be filed. The rubber hits the road as your business starts growing. A sole proprietorship structure offers no legal protection for your personal assets, so you could end up personally bankrupt if your business doesn't succeed as planned or faces an unexpected challenge. On the other hand, LLC owners aren't personally liable for business debts, so you get more protection in case of a business bankruptcy or business lawsuit. On top of this, LLCs offer tax flexibility. Most LLC owners stick with pass-through taxation, which is how sole proprietors are taxed. However, you can elect corporate tax status for your LLC if doing so will save you more money. All 50 states recognize the LLC structure to encourage small business growth. The best business structure for you will depend on many factors, and it's best to consult a business lawyer before making this important decision. However, due to the combination of liability protection and tax flexibility, an LLC is often a great fit for a small business owner. Now, let me show you how you can easily form an LLC in under 5 minutes using InkFile. InkFile is one of the best companies out there to help you form your LLC. You can click on the link in the description to get access to this deal. InkFile is one of a kind as it offers a free package with services such as preparing and filing your articles of organization. Well, you still have to pay $237 for the state fees, which you would have to do anyway if you chose the DIY option. But looking at the bigger picture, all other companies will still charge their service fee on top of state filing fees. InkFile does not collect this fee. This plan already includes a free registered agent for your first year of subscription, and $119 annually moving forward if you decide to continue the service after the first year. InkFile's next packages are the Gold and Platinum packages, which both have package fees, already on top of the $237 state fee. Each package has its own set of services which are all worthy of the subscription you are paying for. The Gold package offers you the benefits of filing reports and taxes for your LLC. Every year, USA LLCs are required to file a state annual report. This report is essentially an information update of your file so that the state knows who is now in charge and how to contact your company. USA LLCs are also required to file state tax returns. To make matters even more complicated, your annual report and business privilege tax share a document and are due at the same time each year. With the InkFile's Gold package, you won't have to scribble notes of these reports because InkFile will handle the whole process for you. Your Platinum package also has these services in the bag with the unique addition of expedited filing, getting a domain name, and a business email which essentially increases your LLC's credibility. InkFile also has an exclusive partnership with Bank of America so you can easily open an eligible checking account for your business. Yes, it is a must for your LLC to have a business account. Remember, an LLC has limited liability, for it is a separate entity from its members. You may forfeit your liability protections if you combine your personal and business money, and this is where the term, piercing the corporate veil, comes into play. Piercing the corporate veil is an LLC jargon that refers to the court's action to hold you as the owner or member of an LLC, personally liable for the LLC's debts or actions. Now, if you have been sued by some lawyer who sees a crack in your LLC, they might resort to piercing the corporate veil in which you are in any position defeated. This is why opening a separate bank account for your LLC is so important. Do you like the level of detail I'm providing you in my review so far? If yes, then make sure to let me know by liking my video and hitting that subscribe button for more high-quality business content.